Okay, guys, this is an easy one for some people, but other people they need to learn how to use it. So Fibonacci levels. So there's two types of. Well, there's a number of types, but there's two types that I particularly like to use. So first one is trend-based Fib extension. I use this for projecting a market top. I also use it for projecting a market bottom. And when I say projecting, I mean the area of. Okay, so it doesn't mean it's going to be. It just usually is. Okay. So look, what we're doing with the trend-based Fib extension, we're obviously looking for the next move up. Where will the next move up? And we're taking it based on the impulse move. So look, we're on SPY here on a weekly time frame. I like to do SPY on the weekly. You can do it on the daily too. Look, it usually works. Weekly is obviously a bit more powerful. So we have an impulse move here. So we've got to move down. That's a move. Then we have the next move up. So that's our bottom, and over here is our top, and then we have the next impulse move here. Now, obviously, if you thought it was there, you could chart it off there at the time, but once the move is completed, that's where we can chart from. So I normally use the control button to magnetize. So I want to get right on that tip and then right on this tip. See how I can be up here somewhere, and as long as I'm over the candle, then I click my mouse. I'm going to drag down here, and then I'm going to magnetize to there, and I'm going to get that level. Now, I know I've showed you guys this a few times, but obviously that works out to be the 100% measured move there for there. So then look, then we take the next impulse move. So our next impulse move starts here, and it finishes here at that top, and then it finishes there on that bottom, and that also works out to be the next 100% measured move area. And then you basically keep working through your impulses for where the tops are and where the bottoms are, and you keep working your way through, and that turns out to be a 100% measured move there for there. And then because this is in a Elliott wave 5-wave pattern, and this move here isn't small. So this is wave 1, this is wave 2, this is all wave 3, right? It's all in the uptrend still. It's not enough down. Like, this is a big down move, right? That's wave 2. If wave 3 went to here and then pulled back to here, that would count. So, but this counts. I'll draw the Elliott wave for you in a minute. So basically, we're still going to take it from that measured move to the top here, and then we're going to take it there, which brings us to 100% measured move there. Now, these numbers down the bottom are just obviously because I've got something turned on here in the settings. This should actually be 0. That's why it's doing that, because it's a mistake. I don't know why it was doing that. But anyway, I'll fix that later. Let's get them all off there. Actually, let's put them all back on. And let's do the Elliott wave. So I'll take this from here to there. See how it's plotting out the 5-wave pattern. And then obviously the top is probably there. So that's your 5 waves. 1, 2, 3, 4, 5. I don't know why it moves in 5 waves. It just does. If you have a look at this parallel channel, from the 09, bottom of the 09 crash, you got 1 wave, 2 waves, 3 waves, 4 waves, 5 waves. Crash, major extension above the channel there. So build your short. Build that short. It shouldn't be above that channel. It was a pretty well respected level. If we have a look here, look, you got a bottom, 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 top, top. So didn't deserve to be up there. Short it. Same with this guy. This is a 6-year parallel channel now, right? So bottom, top, bottom, bottom. Nearly got to the top. Bottom again. Outside. short it, down to there. Back up here, outside, short it, down to there. See how it works? Yeah, always moves in 5 waves. Look, this one, 1, 2, 3, 4, 5, dump. Here, 1, 2, 3, 4, 5, big dump. Okay, it just I don't know why it moves in 5 waves. It does though. Okay. Look, but we can also use this for retracements. So the extension tool for retracements. So let me get rid of these, clean this up a little bit. So when we're looking for the retracements, we obviously still go on the trend-based fib extension, but instead of going from a low, high, low, what we're going to do is we're going to go from a high, low, high, right? So if we take that high to that low to that high, we get 100% measured move pullback area. I just want to emphasize area. I know I do every video, but area, okay? 100% measured move pullback area. Now, I don't believe in crashes that it is as valid, but it is. It's pretty powerful tool. So look, if we go based on the third wave, what am I doing here? I'm doing it wrong. Let me get rid of it. We go to the top here because we're going to go from high to the low. So even I get confused to the high. So high, low, high. So I'm doing it backwards. You know, normally do extension, but we're doing retracement. But we're using extension to do retracement. As weird as that sounds. So yeah, look, 100% measured move area. I know it absolutely, obviously hit exactly. And it pretty much did here too. But and what was the low there? So the actual low was 481.80, and we projected it to be 481.36. It was pretty good. Okay. The next form of it is your fib retracement. So you can use this in both ways. Again, you take a high, you take a low. And here you're looking for your Fibonacci levels for whatever particular reason you're looking for them for. Let's maybe take something off here and see what we get. So let's go here. Okay, so here you've got your golden pocket. You're obviously, you've tested the golden pocket here. You bounced off it. You came back and broke through. You've gone back and retested it. And then back down. So your golden pocket is 618 to 0.5. And then obviously also the other 1.618 is your other golden pocket. Good to use in both directions as well. So up and down. So if we were to use it on the up, we're looking for levels of interaction. And that's probably not a really good one to emphasize on how to use it, but it's a very effective tool. Let's go to a daily time frame and let's have a look at some sort of pullback. All right, so look, we've got a bottom here in October 23. Let's see what we can come up with. If we go off this low and this high, okay, and you can see there, you've come down nearly touching that fib level. If we pull this guy across, just so it's easier to see, you've got some interaction there. You can see how it can be useful, right? Like you want to recognize why you're doing certain things. I know I'm not giving you the answers you want for this, but you do have to use it. If I spend a bit of time and find something, I could show you in the video. I haven't really prepared. I'm also doing a quick one showing you how to use fib levels. Fib levels are very effective. They work on any stock. Maybe I've charted some out here for gold. Yeah, look, we had a potential 100% measured move. Well, actually it was. So this was the start of what I considered like a start of an impulse move. And a high and a low, and that did project out this high here. right? So it's not wrong. Hey, maybe if we take the next one, let's take a look. We go off that low. We're either going to go off this low or maybe off this one here, but let's see based on that one what happens. And we'll take it off that low. Yeah, look, that's pretty decent there for projecting 100% measured move area for the next fib level. You could potentially take it off this guy, like I said, and that obviously even looks even better again. um, Again, it's based on the point of the impulse move. So like that is an impulse move. This is an impulse move, but so is that one. So look, it just depends where you decide to chart from. Also, this is why sometimes these things are better to chart from a weekly time frame, because the actual move can be more so visible. You know, when it starts, when it finishes, and like I said, SPY is actually very obvious for those levels. Let me reload mine so they come back up on here. Yeah, look, SPY is very obvious. And SPY does seem to really, SPX and SPY, they're obviously the same, respect the Fibonacci levels. And, you know, don't buy at 100% measured move, sell. When you got up here, sell. And when you hit those bottoms, there's plenty of other ways to find bottoms, but use it to be aware of, hey, this could be a potential bottom as well. You got to put a lot of information together. The more information, the more reasons you have to take a trade or exit a trade, the better your decision making will be. And Fibonacci is one of those tools. All right. Thank you. Bye.